Good afternoon. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Tuesday, the 14th of April, 2020, about 2:50 in the afternoon. As you can see, another down day in the grains, and here's what's interesting. The grains get beaten up no matter what's happening right now. Stock market takes a look at earnings news that is not good from Wells Fargo, JP Morgan throwing out warning signs, AMC discussing bankruptcy, the big movie chain. And where are we? Running away to the upside in the stock indices. Sort of reminds me of February and January. No matter what the news was, by the end of the trading session, the market had put its arms around it and said things are looking better. I'm not going to argue with it. I'd rather have up markets than down markets, but that's where you're at. The gold, silver. Gold is down, silver market up today, copper up, most of the metals up except for the gold market. And as we take a look at what's going on in energy, because it does affect ethanol and the like, well, Brent pushing $30 a barrel again, and down in the crude to $27.87. So these markets getting hit rather hard as we're seeing. Let me come back to this chart. I want to start here. As you can see, you're under the 18-week moving average on a close-only chart that is on a weekly basis. Now, admit it, we're just at Tuesday, so we have more days to go before we know where this is going to finish out. But this market's coming into an important area in these low 840s. You finished at 847 today. You've been here, done that, but if you get through that again, does that mean we get over to this area? Could be. What would negate this? Well, you'd have to get back up and over this 18-week moving average of closes. You haven't done that. When we take a look at the current bar chart, well, is it a failure? That's the issue. You had up until today a pattern of higher lows, higher highs. You broke that with today's action. So you've certainly stepped out of the uptrend. I don't know that you've gone into a downtrend, but when we put on moving averages, the bias is down. When we put on moving averages, what is happening in a positive note is that the lower Bollinger Band's moving up. Now it's moving up to the tune of about, if we look at it, 6 cents, 5 cents a shot. So it's going to be near the 850 level, I think, tomorrow, something in that general area, as the top number is drifting down at this point. What's been evident is the market's been caught for days against this 18-day average, and today's the first day that it didn't hit it in quite a few days, and it's starting to break back to the downside. So looking at the market with momentum, oversold, void of a trend, resistance now back up at the 871 level, the 18-day moving average of closes, and 845, the lower Bollinger Band, might be a support zone. In the meal market, this has been a stairway to hell if you're in this game. Why? Straight down from the 325 level to 291.50. I mean, it doesn't even give you a higher high day. Look at how many days in a row you've had lower lows and not a higher high. This is something that you want to study because you won't see that very often. And the market just keeps working itself lower. Now, what will happen is when it bounces, it'll become untradeable for a while. This type of action, when you get a bounce, the risk to try to catch it gets too rich. Now, I'm also watching what's going on with the 100-day average of closes in the 18. You haven't had a bearish crossover yet. We'll be looking to see if that develops. Now, if that crosses back under the 100-day average, that could be very bearish action. Soy oil, well, the market's held up much better than meal. We can see that right off the bat. The market's void of a trend. It stopped the trend yesterday, and now it's just battling between the 18-day average and the upper Bollinger Band. Momentum turned down in the market. Corn market. Now, do we get an embedded reading? So let's look. Both numbers today finished under 20. Yesterday, both were under 20, but the day before, and this is Thursday, 20. You have an embedded reading. That means until the red line closes back over 20, I say that the bumps in the market to the upside, the pros will step in and sell it. Continue looking to see if they can push it towards that lower Bollinger Band or some number before the red line flips around. When the red line flips around, and it's nowhere near doing it, that's when I look for price in the 18-day average to make a run at each other. You're not there. In the wheat market, you lost the upside momentum today. Market closed under the 18-day average of closes. Support comes in fact, it came in prior to today, between the 18-day average and the 100-day. You can see the market's trying to get into that. You lose the uptrend in this market if prices get under the 541 level. That'll put prices back into a zone where it wants to slip, and wherever that Bollinger Band comes in, that's where I'd look for the support initially. That number's been moving big time, 10 cents a day, but as it approaches prices, the way the formula works, it'll condense. It won't go that much. But it's certainly going to be very close to if the market drops tomorrow, wherever that drop comes in. In the sugar market, oversold, sideways, refusing to get over that 18-day average of closes. Interesting chart, but still very bearish. Coffee market, whipsaw market, and that's what I think you label this as. This is a market caught at the 18-day average of closes. Then it decided to pick up the 100-day in its little foray here, and it keeps going that way. In the interim, it's really sideways action if you take a look, and what you're doing is dropping the lower top of the Bollinger Band, raising the top one, and you're going to get into, I think, this funnel type action that just goes sideways like that in the bands. I've seen this pattern before, and that's often what occurs. Cattle market, at least it stuck its head up today. The cattle market yesterday, as you know, came in from a limit down day the day before, opened lower today, and then shot back to the upside. In the interim of doing that, you now have higher lows and a higher high. So the swing line's up. The bias counters that because you're under the 18-day average of closes, and momentum flat. But this market's refusing to go back towards these lows right here, and that's the first bit of good news I've seen in the market in a very, very long time. In the hog market, still down and away. I was talking to my friends today that own mini packing plants. They do special types of cuts of meat. So they're not slaughtering the animal. They get an animal product and they finish it and then send it out to restaurants. Try to imagine what their business is like. There's no business. It's been very, very brutal if you're in the restaurant supply and the food industry. And this market, do we have an embedded reading? Well, both numbers here are under 20. They're under 20 the day before, and they're under 20 the day before. You now have your embedded reading. So a positive and a negative. The negative is still means downside pressure and getting sold on these markets. The positive pressure is the odds favor when the red line gets back over 20, that like it did here. You get a run towards that 18-day average, and the further that number is away, the better the potential play. So you mark down in your little trading book ideas that might be offered, where they could be offered, and what you want to do with them if and when they are offered. But as you can see, as we're finishing, it's 3 o'clock in the stock market. Look where we're at. Metals have sunk back a little bit, but it's another one of these times where in the NASDAQ, you have made more than a 50% retracement with this type of close. You're at about 50% or so in these two, and traders will say you're out of the bear market territory. As a technician, I can't argue that. This market had a panic low, and I keep watching the VIX fall. You can't fight City Hall when you get those type of moves under your belt. But we're talking ag here. And our firm, Linn, they do an awful lot of research in this. So whether you're in the corn market, the grain market, it could be from oats to canola, they write about this all day long. I don't know if you know it, we have our own meteorologists. We have 2 of them actually that work with us because we do a lot of work with the farmers, and they want ideas on where the market's at, be it in other parts of the world, South America, where they're at here. If you're in the meat industry, you'll hear our broadcasts throughout the day as we have people that years, I mean many, many years, like my hair, of trading this, of working with the packing houses, and they'll bring you what they're seeing and what the different feedlots and so on are doing. Then we have the soft markets, the ethanol market. So we cover it all. So if you haven't seen what we do, you might want to get a free trial to our charting software, and at the same time, try our market research within it, because number one, we send out emails all day long. They start, 4:30 in the morning, and they go right on through about 1 in the evening. and then they start again because we're watching the markets all over the world. So you'll get different parts from different parts of our staff. Then the oral comments come out, and don't worry if you miss them. When you go into the software, we keep a media library of what time they came out, who did them, and you can listen to all that. Go to our website, www.iraepstein.com. Sign up for what you'd want there. Remember, the software is pretty neat, especially the Pocket software. And then that goes on your Android or iPhone. And you can click up here if you want to get there if you're watching me on YouTube. I'm Ira Epstein. You have a great day, and I will see you all tomorrow.